trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, this is the Dow Jones going back over the last several months. We do have a potential here for a head and shoulders pattern. You see the left shoulder right here. It's almost exactly at the right shoulder. That comes in at the 49.62 was a schedule. It came in as 49.84. We're 100 points below that right now. You can see the A, B, C, D connecting right here. Now, the NASDAQ has made well over $2,000 on its move down. You can see here's where we were with the NASDAQ. Hold on, get up and see. There's where we were. So we broke below the 382 here, folks. Now, let me show you something, because we talk about this all the time. There was your chart earlier in the morning, and there was your rally. You stop at the 382, boom. Now you broke below the 382. There was the 382 rally. Folks, that's 100 points right there. That's $2,000 right here. So it jumps around quite a bit. So we're watching it closely for you. Hopefully it'll make some sense by the time we go through some of these others that we're looking at here today. Now we're going to look here at the one that went a little higher. This is the only one that went higher, and that was mainly, I believe, because of the open. We were expecting this to get to 85. Okay, that was right here. But there's your opening run. We went about 20 points higher than that, because we were looking at 6487 was the number we were looking for. It went higher. That's the opening run here, that first 10 minutes. Then it broke down, had your nice little retracement here, and then broke down again. It looks like we've had another 382 just now. Let's just double check and see if that's correct, and we'll look and see. Well, he went to the 50%, but it's moving a little bit lower. So that's pretty much. But I use the NASDAQ, folks, because that's been the leader of the pack. So that's why I was watching that, okay? So, like I said when I sent this thing out, I said, this is for your information only, and this is not a sell signal, okay? I make you do the work yourself, as Twentyman said. He was smiling over his shoulder as he talked to me. Now, let's I want to show you something, folks. This is a stock that's really rocking and rolling today. This is one of the expensive stocks. I think this is number 4 or 5 in the Dow Jones, and you can see this is Home Depot, and you can see it's up well over 10 points, and that's gets that Dow Jones moving. So there's where we are. So let's just see where we are. We're going to go from your high right back here. We're going to do a little bit of the surf and turf. Well, there we are, right at the 786. Let's just see how the old CD action is. And there it is right there, okay? And look, there's where we are, 07, and we're almost there right now. We just hit, so how high do we get? 405 and change. It's got 2 points to get. There's your 78% level right in here. But there is one Dow stock, folks. This is important from my perspective, because I watch these darn things and I see how they operate sometimes. So hold on one second. I have to put these in tile verticals so that I can not forget it. And that would be the, where are you, Softy? Here it is right here. Now, this is believe it or not, this is the number 2 stock in the Dow, folks. With the Dow up 200 or 300 points, the second most active stock, or the expensive stock, was this one. All it did was make an exact 382 over 1, 2, 3, 4 days. Remember, we still have that gap in here. But look at this, folks. This thing's down $7 already. That's what pushed the Dow down when the others, because Goldman Sachs didn't do anything today. That's number 1. So this is important. The fact that you got the number 2 stock only could make a 382 retracement. Maybe it's not as bullish as some people think, but, I'm just looking at patterns. That's all I'm looking at. Okay, so we'll move that around over here, see where we are. Let's get over. We got something else we have to cover with that. Let's just Goldman Sachs here, because this has been the one that has been the leader of the pack here. This is what we had, that big move yesterday. Well, let's just blow it up here so we can see where we were. All right, there's where we were last few days. So we got a little bit of surf and turf action here. I say that because you have to follow your own. And you should have got today, you should have got to 752 and it got to 749, so it didn't quite make that. But it's been in this area here on the long-term weekly. It still falls in the realm of 3 drive to a top. That's all I can say, and I stick to it. We'll wait and see. Okay, let's get this out of the way, and we want to move that out of the way. I want to talk about one that's coming up. It's going to be a good one, folks, but it's not quite ready yet. Let's get up and take a look. This is our good friend, Mr. Crude Oil. I spoke with, by the way, our good friend, Mr. Stan Harley will be our guest today. Here's where we are here with the crude oil. This is a 4-hour chart. We're going to go down to the daily now because we're getting ready to break down to this level right here. This is the level. We have Mike Moore coming on Friday, okay? And Mike said, watch this number down here at 6070. Well, guess what that is, folks? That's right at the 786. Well, we like geometry and we like mathematics, so we're going to have a little bit of both. There's your mathematics right here. There's your mathematics right here. And now we're going to add a little bit of geometry to it. There's your AB leg right here. There's your CD leg right here. And we got to make sure that we don't get wrapped up in this one, right? The good part of this, folks, is look, this thing has been really bearish since we hit the 382 back here at 71. We're down $9,000, folks. How many days? Fortunately, I didn't stay with it all the time. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days down. That is an outlier event, folks. That means that doesn't happen very often. So we got to be prepared because the market's extremely oversold. Even this one, look how badly it broke in 3 days. And look, it took almost 2.5 weeks to get up to the 382. The last time we had a big break here, look. Well, they're both the same high. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days down. And here we are again. So we got to start looking for a place to go long. Well, Mike says it's 60-10. All right. So here's where we are. Now, I'm not going to buy it today, but I'm going to be watching it all this week. So first we'll get back to that hourly chart. And then we can see a little bit better of what we're doing here just over the last few days. See, that'll give us a rough idea of what we're watching. And so we'll clean all this out so we can watch it together. Oh, we got something nice here. I can see it coming in here right now. There's where we are. Oh, I think this will be okay. Yeah, this will work out fine. I'll tell you why. There's your high right here. There was your first 382 retracement that we talked about right there. There was your second one. Then we had another one, a couple in here, on the shorter term along the way. Had one here yesterday. If you remember, we brought that to your attention. That was today. We did that in the video that we did this morning. Went right up to it. Now it's coming down. So with this data that we have here, we can take an advantage of that because this is going to be, let's see, from the high was way back at 72. Oh my God, that's just so far away. That's not going to be any help at all. Well, the only thing you can look at here on this hourly chart is this move right here, because that took a long time. See, that took a long time to do that move, just like this one did. So we have 2 to work from. So the first thing we'll do is we're going to see from our high down to our low, okay? And that's only 30%, so that's not much of a thing. But that gets to 60. Stay with us, folks. We'll be right back. Hang in there.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, now we've got crude oil. This was the 382 after the war that never really happened, okay? Now, you notice as we come down, this is a 4-hour chart. So this took a whole day to make this retracement right here, folks. And that was the 382 that you were looking for. Because if you go from your high down, shut the front door and raise the rent. Let's get it right. You come right there. And you'll see there's your 382. It's a little right about the 50%. Okay, that breaks down hard. Now when that breaks, that means you want to watch for the next time. Look at this. You rallied the same amount. But you got to go to the last high that it made, which was right back here. And we've done these before. These were trades that we were actually doing. There it was right there. Now we know where we are. Look where we are now. We're sitting right at the 1.618 of this move down. So if we know that we have this, let's just walk through this to see the ABCDs, that we can see them together, because this might be the day to buy it. But oh my goodness, I think there it is, folks. It's knocking on heaven's door right now. Boy, this is about as low as risk as you're going to get. 62.11, the low has been 61.94. So that is really close. We're at 62.25. I don't think you'd be risking much here to be a buyer, folks. So that is an ABCD to the downside from that high right here. And of course, we've got another one. There's a potential we could go lower, 62.11, which we did, but there was nothing there. You see, there's 62.11. The low was 94. You're now trading at 62.25. So I think that's a really low risk buy. I really do. I know I'd like to buy it a little bit lower, because this is what I'd really like to buy it. Is if I could get it down here. I wouldn't be risking much on this, I can promise you that. But there's your ABCD down here to that same level that Mike wants, and that's at 60. Mike Moore is at 60.41, so we could certainly do that. But if you buy here, you're only risking 30 points. Let's just go to a small time frame, 8 minutes, okay? Okay, there was your bottom right here. Now the market's moved up, and this is where you sit right now. Now let's just use our old, well, you can't use 382 yet because there's not really much happening, but we're going to try. There's your low that we made right back here. You pull back, and there's your 382 sitting here right now. So as soon as I'm off the phone here and we get Mr. Harley back on, I'm going to buy it and put my stop below here. I'm only risking $300. And if I'm right, this could be a major bottom because this is really close. That's what I try to do when I do these things, folks, for risk control, is to do exactly that. But it doesn't work all the time. As you know, sometimes it's profitable trades. Other times it is not. So that's mainly what we're watching here right now. We're still getting a little bit of bounce here in the markets a little bit, which is good. Let's move over to the gold market because I think gold is trying to make a bottom. By the way, I want to bring to your attention something in the gold market. We'll get this 4-hour chart up because that's where we were looking for. This day right here, folks, yesterday on the 12th. Okay, that day was exactly one standard deviation move, exactly to the exact tick. 33.79. Now the 786 came in at 33.74. But now we've had a little bit of a rally. This is the first rally we've had since the big break, which happened back on the 8th. So I was watching this very closely this morning, so I'm just going to go up and show you what I was watching. Okay, there was our first move down. There was our big move right there. So I'm going to move this over a little bit, and I'm going to blow it up and show you what I was watching. Okay, let's get it right here, right now. And just a minute, get this straight here, because I'm an ABCD person, okay? So this is what we're watching. There's your A leg right here. There's your B leg. There's your C leg. So I said, all right, let's just see what that's going to do. So you mark it. There's your A leg. There's your B leg. There's your C leg, okay? And it should have gone to 62.24, but we didn't get there. We got to 62.20. I wasn't able to get the trade off. And of course, it misses it by, $4, but for me, it's got to be a lot better than that. And so I never got, involved in it. But this one brought my attention to something, because look at that big move right here. That's $15 move here in gold right out of the back. We had one of those back here. Why was that coming in right there? And so the first thing I looked at was from this low up to the high that we made, and sure enough, there it was banging right at the 382. Now, it rallied up and it's come down, but it hasn't really done very much. So that's what I'm paying attention to. I think we've made a major top here in this gold market, folks, and I'm looking for the first rally. You see this number 34.42? We're going to get this up here and put this on the 4-hour chart because you'll see it a lot better, because if you go from that level right here and just draw the 382 in, there it's going to be right about there. There's your 34.40 right on the money as a first 382 retracement. And if we get there, that's going to be a left shoulder, right shoulder, head and shoulders pattern if we get to that level. So we're watching it very, very closely to see if it's going to be helping. We just made new highs here in the Russell. So maybe these things are not working. Well, they're still working because the NASDAQ has bounced off that 382 again. You'll notice here, that's exactly what we've done here. Now let's look at it again because we made a lower low. All right, so let's get up and look at the hourly. Well, we can do it in 8 minutes. Just do it that way. We made a lower low now, and there was a 382 retracement. So we got another 382 retracement coming in very shortly. So we're going to mark it from this high. There was the sell signal, is right there, folks. 2040, we went up to 2068, and then you had this big move down. There was your exact 382, that level right there, and then it broke that. Then there was the first 382 retracement that came in right there. All right, see it right on the money. Now we made another new low, so you've got another 382 coming in almost exactly at the same level. So it's trying to hold up in here, and it certainly might. So that's what we're going to find out, if it's going to do that or not, okay? So that's what we're watching here so far today, and I think those are the ones. Let's clean this up here, tile vertical. And we want to talk about the soybean market because, hold on one second, I still think I had it in here somewhere. Soybeans have really moved, folks, right, considerably more than I thought they were going to move, but I didn't think they were going to move that much. Hold on a second. It was mainly due to the WASDA, World Supply Demand, Agricultural Supply Demand, did it, and boy, it was really bullish to the soybeans. we were in them and made $500 and then never got back in, and that's a little troubling. But here it is right here. Get your daily in. You can see here we've exploded through here. Right here, we went through the 61% retracement. There's the ABCD right there, folks. And I took a profit in this, and then it went a little bit lower on that day. I took the profit here and left that much on the table. But, you know, what are you going to do? That's not much else you can do is when that happens. It's just a little bit of this, a little bit of that. Okay, now we'll move on here just a little bit right here, and I think we've covered the gold. Oh, someone's asked a question about silver. We got Stan coming up, so bear with us, folks. We'll get silver up here just now, and you'll see it. Silver's not acting badly, folks. It's actually acting pretty good if you want to know the truth. You can see here's where we are today. It's backed off just a little bit for 3 days. Remember, gold dropped, $150, and what did silver do? Silver dropped about, let's see, 39, about $2.50, and it held right there. I mean, so it's, and look where it is. It's up on the day today. So it's acting pretty good. There's nothing different about silver. If silver can ever clear, get this weekly here, if we can ever clear this, I think it can make $100. That's got to clear above this, then it can make $100. Let's stay tuned. We got the main man, Mr. Stan Harley, in the house, so stay with us.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we have in the house Mr. Stan Harley himself, Mr. Bull himself. How are you, buddy? What are we looking at, pal?
Mr. Pesavento, doing live and well here in Virginia.
That's what I like to hear, pal. Living the dream on the green side of the grass. What are you looking at, my friend? Much higher, I guess, correct?
Well, I think so. Let's take a look at some charts. And
okay.
I think what we're likely to see here is a continued bull market structure, Larry. Mm-hmm. The plethora of evidence that I have under my microscope says that we're going higher. Here is a long-term chart, one that I've showed before, but it's updated through the present. And just as a backdrop, a lot of the people in the financial media, when they talk about bull and bear markets, particularly bear markets, I hear this notion of whether or not the market has pulled back 20% or not is a threshold for defining a bear market. And I just respectfully disagree with that. What I do, which is a little different, I focus on what I call the primary monthly cycle. And what we see here on the chart here on the screen reflects just that. The primary monthly cycle over the long haul, meaning decades, tends to fall around the 49-month mark, about 4 years, frequently referred to by technicians as the so-called 4-year cycle. And, oh gosh, for the last 60, 70, 80 years, the majority of lows have occurred in the vicinity of every 4 years. Actually, it's 49 months. And one can see the math there on the screen. It's Fibonacci related. But there are two companion cycles that show up secondarily. One of them is about 80 months, and the other one is about 30 months. So here we have the last, approximately 30 years on the screen, and you can see all of the primary monthly cycles have either been of the 49-month variety, the 79.6-month variety, or the 30.4-month variety. Round those off to 80 and 30 and 49. The two most recent occurrences of this cycle were of the 30-month garden variety. And yes, the market did happen to pull back in excess of 20%, but that's not Stan's definition. Stan's definition is when we make a cyclical turn in accordance with the primary monthly cycle. And we're heading higher out of the April 7th lows. In fact, the S&P now is in record high territory. But there's another takeaway on this chart too that gives us some clues about what's happening. And I've marked over the high points of each of these primary monthly cycles the letters RT, which stands for right translation. And what that means is the crest, or the high point of this cycle, relative to the middle. Here's the middle of this cycle right here, and the crest occurred to the right, as you can see with my mouse, occurred to the right. That's known as right translation. And right translation is characteristic of bull market structure. And note, all the way up, the next cycle right here had right translation. The next one had a right translation. The next one had right translation. And the most recent one also had right translation. So until we see left translation, which we have not yet seen, we are still in a bull market environment. Now, having said that, my working theory right now is the next primary monthly cycle is going to occur around the 49-month mark, which is about 4 years. So if you take April 7, 2025, and you have 49 months, just back of the envelope math, that takes us to May of 2029 for the next low. Before we get a low, we got to get a high. Now, the second question is, are we going to have right or left translation? I think, in italics, we're going to have left translation, not right, which would mean we would likely top out in the first quarter of the current 49-month cycle. Ergo, about a year, plus or minus, from the April 7th lows, we should see a significant high. That's my belief right now. I think we get it in the first quarter of next year. So we're looking at another 6, maybe 9 months of a bull market environment here.
Okay.
In the shorter term, this is a chart of the Dow Industrials. The big 5 indices that I look at are the New York Composite, the S&P 500, the Dow Jones Industrials, the Dow Jones Transports, and the NASDAQ Composite. And 3 of those have gone to record high territory of late. The one significant one among those 5, the Dow Jones Industrials, has not. But look what's going on here. Going back to late 2024, we've seen 3 stabs at the 45,000 level, basis the Dow Jones Industrials, and we have not yet broken through. Some people would look at this and say, oh my gosh, triple top. Oh, sell, sell, sell. Well, maybe. Or, on the other hand, Stan is thinking maybe we have what's called a Gann rule of 4 scenario developing here. And Mr. Gann, about 100 years ago, saw this recurring pattern. He termed it his rule of 4. And what it means essentially is this, is that the first 3 stabs at overhead resistance are failures, but it's not a triple top. What happens is the 4th push against that overhead resistance level is what he called make or break time. If the market fails to break through in that 4th attempt, it slams down in earnest and you got a major top on your hands. On the other hand, if it breaks through on that 4th attempt, then you get a volatile breakthrough to the upside and the market spreads higher. And I think that's what's developing now. I think the lows we saw on August the 1st, right here with my mouse cursor, were probably a truncated 17 trading day cycle that I've talked about in past interviews with you on the air here. And from this point, we're heading higher. The Dow is, I ran this off, a little over an hour ago. It's getting very, very close to that 45,000 mile marker in the sky. I think we will take it out and then some. I think the path of least resistance is northbound. I'm not saying the breakout's going to occur tomorrow or the next day or the next 2 or 3 days, but I'm saying it's coming and it's going to carry the rest of the market along with it. And so fighting this thing, I think, could be hazardous to your bank account. But my thinking is, Larry, we're going higher.
Well, you've been right all along, Stan. I have to say, of all the people that we've had on the air here, you're the only one that said we're going straight up. And boy, we did go straight up from April the 7th. And of course, the largest up day ever in the Dow Jones was, I think, 2,700 points on the 8th or 9th of April, which was, unprecedented. So you've been absolutely correct so far. Now, we have a question from one of our listeners, and that is there anything that would change your mind? And after we take a break, we'll let Stan come back and answer that question. Stay with us, Stan.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're back with Stan Harley, and the question has been posed. What would possibly change your mind, Stan, that we are going to go down from here as opposed to up?
That's a good question, and probably merits a little bit of time responding to. I tried very hard not to get married to yesterday's decision making. I developed theories based on technical analysis and cycles and Fibonacci-Lucas relationships. But there are times when we see price action not acting in accordance with our prior views, and by golly, we better change our mind or we're going to get steamrolled. I'm reminded of the words of W.D. Gann 100 years ago. He wrote, "The man who refuses to change his mind will soon have no change to mind." In response to the viewer's question, I would have to see price turn south. Right now, my indicators, monthly, weekly, daily, are all heading northbound. So that tells me the trend is higher. But let's say, hypothetically, the Dow reaches up here to this 45,000 mile marker. We're not far from it now, and doesn't break through. It stalls and it turns down and it pulls the rest of the market down with it. Then I might have to revisit some of these theories here. So we don't know that yet, but in my mind, from everything that I have under my microscope, I think the trend is higher, but I'm also willing to accept that theory may not pan out to be true if evidence to the contrary should come to fruition. So let's kind of see how this thing develops.
Okay, that's answer the question. And the second question is, I think you've answered it before, but you basically do everything by hand. Is that correct? You don't have computer programs that run this data and everything. Is that correct, Stan?
Yes, Larry, I do everything by hand.
Okay.
I do all my analysis in spreadsheet, and I keep, and I look at different time frames. I look at yearly data, I look at monthly data, weekly data, and daily data. And I keep separate folders for each of those time periods, the daily being the largest. And so that's essentially how I try to stay organized. But there is no AI or any type of Now, let me just augment that just a tad. I am a member of the Foundation for the Study of Cycles, and that organization has produced a program called the Cycles Analyzer Program, which can analyze a data set and extract the dominant cycles from that data set, and I do use that. But sometimes I might disagree with what the computer is telling me. Sometimes it's right, and sometimes I'm right. But for the most part, no, I do it all by hand, calculator, spreadsheet.
Okay. I had one other question, do you confide? I know you don't. We chat about a lot of things, but seldom about the market. Do you confide in other people like Bill Cherubi or anybody to get their ideas, or is it all Stan Harley? I know the answer to the question, but you can answer it.
Well, yes to both questions. Yes, I know Bill Cherubi well. He and I are good friends and colleagues.
Yep.
Yourself. Yes, I exchange ideas with other market technicians. For example, I was just in New York in June for the Foundation for the Study of Cycles conference, and we had some of the best talent on planet Earth, absent Mr. Pesavento. I wish he had been there. But we all exchanged ideas and views and processes. So yes, I want to try to stay in touch as best I can with my colleagues in the biz. But at the end of the day, I make my own decisions. That doesn't mean I can't be persuaded to look at somebody else's view and go, actually, he or she has a better idea. But probably 95, 99 times out of the 100, what you see here on the screen that I present, these are my own original views.
Okay. Well, that's pretty good. I want to thank you for being our guest today. We'll have you on again in a couple of weeks. And Stan, anytime you see something that you would like to bring to the attention, you just, text me or something. We'll have you on as soon as possible, because you have done a splendid is the understatement of the word. So please keep in touch with us like we always do, and we'll hopefully get some great stuff from you. And no matter when it turns, we'll be ready.
Okay. Thank you, Larry. My pleasure.
Hey, thank you, my friend. Have fun over there in Virginia. At least it's not 102 like it is here in Tucson today. But it's a balmy 202 or 102. Thanks a lot, Stan. We appreciate it. Stan Harley, the Harley Stock Market Letter, folks. If you want to get a copy of his letter, just give him a call, and then we'll be back with him very, very shortly. Okay, if you'll bear with me here 1 second, folks, I will get the charts back up, and we'll look what's going on. I had some questions about the grain markets and why the corn and the wheat are, totally collapsing. And we'll get that up here in just a second. And let's get up here. First, what we'll do is we'll take a look at the corn market. And the corn has just been, actually not decimated, but really close. Okay, this is the corn. Let's see if it's still going lower. Yeah, it still is. Looks like we just made new lows again today. Here's where we are. There it is right now. You can see we're heading lower. We bought it here, folks. We had it rallied up to the 382. We made $750 on that. And look what's happened. It just keeps breaking. That tells us that we could easily get to 376. Folks, that's only 21 cents from where we are right now, 20 cents from where we are right now. So there's a possibility we could still get there. That would be a monster buy, because that's a 1.618. And it will also be this really large ABCD pattern to the downside, I believe. Yep, that's it right about there. So we're going to watch that one. But this one worked for a while, but after that, it just didn't. So let's take a look at the wheat. That's been my favorite. And unless people are going to stop eating cookies and pasta and bread, I don't think it's going to go down forever. But so far, it keeps going. Here it is right now. As you can see here, we did make another lower low today. We're right in the zone, folks. So this, if you want to be a buyer of the wheat, this is where you got to buy it. You can see here we've made a lower low, and now we've turned up. Now the low today was 23. We're now at 28. So it's up a nickel from that point right here. You can see these two numbers coming in right here, 29 and 28, and we're trading at 28. The low's been 23. So if you buy it right here at 28, okay, you put your stop here at 22. That difference is $300. You can become a farmer for $300. So it's got to go below here. Let's just take a look at it. There it is right there. We want to be a buyer right here where it is right now. That's what we should have done, was buy it at 28. Okay, and you're going to put, let's give it a penny, 28, and we'll put a stop at, let's just write this in so everybody can see it. We're going to buy it at 528. Okay, and then we're going to put a stop here at 521. We're going to risk 350, that's 7 cents. $5,000 a bushel times 50 cents a bushel, that will be a total of $350 if we're wrong. But if we're right, we only need 7 cents to break even on this. So we're going to buy it here at 28. That's where it's trading right now. Stop at 21. That means it's got to make a new low on the day. It's going to violate these two numbers, and we're going to find out if it's right. But this is one that I like it. And sometimes they work, sometimes they don't. But let's keep our fingers crossed and see which ones we're watching here. Okay, let's get up, and we'll be right back. Stay with us, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this was the crude oil. We were talking about this when we had Stan as our guest. We were looking at that bottom to come in here. There was the 382. We've rallied $300 off of that. But we've made a higher high now, folks. So we have some more information to go on. First, what we'll do is we'll blow this up, and we're going to see now we have a new 382 set up. Remember, there was the first one right here. Okay, and we'll bring it up there. There was right there. Well, hopefully it's there. Yeah, there it is right there. And now we've got a new one set up. So we have to get rid of the old one, and we're going to just draw it in from this low right here. The next 382 is going to come in at 42. So keep an eye on this, because if this backs off, it's no different than this one. You take it and you put your stop below here. So if you buy it at 42, you're going to have to put your stop at 22. You'll have to risk $200. Now you're day trading $62,500 worth of crude oil. All right, the margin is about $5,000, so you're going to have to pay attention to that. But if you stop and think, if you make $300 or $400, selling some of these ABCDs or buying them, you can add up pretty quickly. So that's what we're watching here as we're paying attention to this here so far this morning. Okay, now let's move on here. I think what else we wanted to talk about was soybean meal. Let's get up here, and also soybean oil, folks. Let's just spend a little time with soybean oil, because I have done some work on this, and I'm very, very bullish this. You can see here, let's get this out of the way. Oh, shut the front door. Don't do this to me, please. Don't do. Oh, I don't want to be hacked again. Okay, here's where we are. You know what? I think I made a chart of this so we could also see it real easy if I didn't lose it. Oh, did I get rid of it? Shut the front door. It's not here. Well, I can redraw it. So hold on here, folks. Here's our bean oil. I'll just show you what I'm watching. Now, there was the 382. We were going to try to buy it there. We ended up breaking even on that. We came down, and now we bounced back up with the rest of it going higher. But here's what we'll be watching. Oh, I've got to leave. Oh, shut the front door. Live every day in an attitude of gratitude, and may God bless. I'll cover this in the video tonight, and more emails will be coming, because it looks like we've got the problem fixed. Knock on the wood, so we'll see. So live every day in an attitude of gratitude, and may God bless.